Our base case scenario, Kirsten, is for a mixed housing market with dwelling price rises ranging from 1 to 4% as a national capital city average. But within that, we are forecasting some capital cities to fall in value, while other cities are actually going to record a very strong year indeed.
Okay, let's dive in a little deeper. Where do you see the biggest gains?
The biggest gains will be in Perth once again, and this will be the third year running. Our forecast is for Perth housing prices to rise between 14 to 19%. So a very strong market. Looking at all the leading indicators we have on the Perth market right now, it's all suggesting it's a deep seller's market at this stage with plenty of eager buyers out there.
Are the gains in places like Perth and I believe also Adelaide, Brisbane and Hobart likely to come at a cost to the country's biggest residential property markets, those in Sydney and Melbourne?
Yes, our forecast for Sydney and Melbourne is that we're expecting another fall in housing prices of between 1 to 5% respectively for each of the capital cities. Now, when we say that, the forecast is that for the first 6 months of 2025, we're expecting these falling housing prices. Then, as part of the assumptions we have, is that we'll see a Reserve Bank interest rate cut, potentially two, roughly around mid-year. And after that point, we should see an increase in buyer confidence in Sydney and Melbourne. So where the market will finish the year net somewhere a little bit behind where we started at the beginning of 2025. But overall, a rising market towards the end of 25 for our two largest capital cities.
I'm going to return to the assumptions that underpin your research, but before we go there, where are you forecasting the largest falls?
The largest falls are for the Canberra housing market. So we're noticing that there seems to be a surplus of stock in the market. The rental crisis that we speak of nationwide has actually ended in Canberra from what we can see. Rental vacancy rates are well and truly up. Rents have actually now flatlined. So with that, and with an assumed slowdown in population growth for the ACT, we're actually forecasting dwelling prices to change between -6 to -2%.
You've explained that your base case rests on 1 to 2 interest rate cuts around the middle of the year in conjunction with population growth of at least 500,000 people. What happens if those forecast interest rate rises don't eventuate?
If there are no interest rate cuts at all in 2025, we expect the downturn in housing prices in Sydney and Melbourne to continue on for the remainder of the year. So we would actually expect to see housing price falls of up to 7% in those capital cities. We would still expect to see housing price rises in Perth, in Brisbane, in Darwin and Adelaide, but it's most likely they'll be high single digits as opposed to double-digit price gains.
What happens if the Reserve Bank cuts earlier than financial markets are currently pricing in?
Yeah, so potentially an emergency rate cut, we're thinking potentially March if it was going to happen. We can then expect housing price rises net across most capital cities, with only potentially Canberra recording a flatlining market. So that would certainly, an emergency rate cut in March would probably mean we'd see further rate cuts in 2025, and that most certainly would stimulate housing activity.
Can you sum this up for us? Because it does seem as though in the context of the housing market making some incredible gains in recent years, that your base case does suggest the worst case is basically a slight moderation in our biggest cities.
It is, that's true. We're not for any moment forecasting a housing price crash anywhere. And the reason is that we're missing one key ingredient, and that is that we have a shortage, an underlying shortage of real estate, compounded by explosive population growth. So whenever you do studies on historical housing price corrections, major ones at that, it generally comes with a major surplus of real estate in those respective countries. And here in Australia, we're just simply not getting that. As we all know, we're having a rental crisis and we're currently underbuilding as we speak.
When do you see that coming back into balance, the earliest possible timeframe?
Not next year, not the year after, potentially 2027. Much depends on our population growth rate and much depends on whether the federal Labor government does have success in building 1.2 million dwellings up to 2029.
Louis Christopher, thank you.
Nice to be with you.